Two short shows, Tony. Welcome back to the show, Tony. Welcome back to QAV, Tony, here at the Sydney Cricket Ground. FMG, Tony's in the news today. How are you, Tony? How's Cape Shank, Tony?
Yeah, good. Not as sunny as the SCG, but it's.
Do you want to attempt? Do you want to attempt your South African accent? I do Richie. You do. Who was the other guy?
Tony. I'll just get my keys and stick them into the wicket. Yeah, look at that crap. That's more Irish, I think, isn't
Yeah, they're close.
Yeah.
Close enough.
it? I can do Benno.
Everyone can do better. If you grew up in the 70s and 80s, you can do Richie
true.
better.
And Billy Burningham's version of.
Yeah, I think we're all doing
What's
Billy
simple
Burningham's
What's
version of
simple way
Richie.
today? The bone, the brown, the off-white, the white, the grey. Well, the third test starts soon. At least that'll be a distraction from all the wonderful news happening in Australia this week. Okay, the other side, I've got a pulled pork to do Cam on Aeris Resources, if I'm pronouncing that right. AIS. AERIS. How do you pronounce that, Cam?
Aeris.
Yeah, that's what I thought.
Haven't you done them recently? Feel like we did them like last week.
Well, I had the same feeling. It's not in our list of pulled porks, and I remember doing it about 5 years ago. I was in the first year, I think, of our podcast series. And I remember it because we had a big debate about how we treated a company that had more than one commodity that it mined, and how we found a commodity chart for that company. And we started to look at its revenue split or its profit split between those commodities. And this one, Aeris, I think, is almost neck and neck, and that was the issue for us. Which one do we use? And I think it alternates between copper and gold. But in this case, now it doesn't matter because both copper and gold are buys. So whichever one we decide is the more dominant, and they seem to be fairly even in terms of split. For this company, they're both doing well. And that's another reason for picking it today, is it's to extend this copper theme for our very own buy list copper miner.
Episode 437, Tony. It's when you did it.
How long ago
so
is
that's
that?
a few years ago.
Yeah.
September 2021 was the last time we did it.
Yeah, I thought 5
And-
years ago. That's 4 years ago. Okay.
We did talk about Robert Milner's departure from the board last week. That's why it was fresh in my mind.
Oh, okay. Was it this board that he left?
Yeah,
Yeah. Okay.
yeah. It was Aeris Resources.
Okay. Well, I checked this morning, and Sol Pat still has a large shareholding in the company anyway. So I haven't seen any announcement about a replacement, but I expect Sol Pat will want to have someone on the board of this company. Okay, so let's go through it, because if you like the copper theme, this is one to have a look at. And it's also a reasonable size. ADT is $2.6 million for this company, so one of the bigger ones on the buy list. It's a mid-tier precious metals producer. They have 2 producing operations, and they call out 3 development projects. And a lot of these, both of their operating mines have fairly large tenements, and they're still drilling and exploring on those tenements, and have some reasonable prospects that they can continue to develop into further mines. So they say an excellent platform for growth, and it's probably fairly true. So 2 cornerstone assets: the Triton mine, which is a high-grade underground copper mine located in central New South Wales near the town of Nyngan. And that's on a 2,330 square kilometre prospective tenement package as well, and includes opportunities for expansion, which are already kind of underway for the Murrawambi pit, Constellation, and Kurrajong and Budgery potential mines. Murrawambi pit's interesting. It was an old copper mine slated for rehab, but because the copper price is booming, they're going to re-strip the mine and push off the rehabilitation of it, which means they save a bit of money on rehab, but they're also making money now that they can afford to continue mining in the Murrawambi pit. And they also have a mine called Krakow, which is in Queensland, about 500 kilometres northwest of Brisbane, and that's their mature high-grade gold mine. They also had assets in North Queensland, which they've recently sold for $15.5 million, and last I saw that was expected to complete soon, and that was the Mount Collin mine, and that also had tenements, one called the Barbara Project, which looks promising, but they decided to sell that rather than go through the capital development required to continue with it. They also have over in WA an opportunity called Jaguar, which is currently focused on copper zinc. It was a mine called it's called a brownfield opportunity, so it's an ex-mine they can restart, but they're also doing gold exploration in the area, which is proving promising in 5 prospective areas. The Jaguar mine is currently on care and maintenance, which is costing a couple of $1 million a year, but they may well start that up again in the future. And they also have the Stockman tenement in Victoria, which is also copper, zinc, gold, and potentially silver in terms of what the feasibility study is showing. And they're projecting a 12-year mine plan for that Currawong mine in the Stockman area. And they're at feasibility study and are deciding to shore up their proposals to proceed. Couple of things I noticed in their results. They are a high-cost gold mine. I didn't pick up on what their copper costs were, but their latest quarter said their all-in sustainable costs for gold operations are 3,692 Australian dollars per ounce in the September quarter, which is kind of fine given that gold's selling for 6,500 Aussie ounce, so there's a margin there. But I asked Google Gemini what was to give me some examples of ASX gold miners, and it said in late 2025, the all-in sustaining costs vary, but many major miners like Northern Star hover around 2,100 to 2,300, or some like Evolution Mining target even lower costs at 1,400. So a few other examples, mid-tier miner like Genesis was around 2,300. So this company's at the higher end of that. Whether that comes down if they do go ahead with some gold expansion, whether it comes down as they get out of North Queensland, which is being sold, I'm not sure. But that it's certainly a case that looks like this company's making hay while the prices are high. And if they continue to go higher, good luck to them. Another interesting part of the finances for this company is a thing called environmental bonds. So, hadn't come across this in the detail that they were called out with in Aeris' case, but I'll go through it quickly. Aeris Resources holds environmental bonds, which are financial assurances that the government requires that when they do exit their mines, that they have sufficient funds for the rehabilitation of those mines. And one of the reasons that Washington H-Sol Pat was involved in the company is they provided a $60 million guarantee facility for these environmental bonds. And along with the fact that the company has to hold $80 million in restricted cash, and that covers all their requirements for environmental bonds. And that was refinanced with WHSP. Washington sold Pats recently. They did have, prior to that, a $50 million facility from ANZ. They also did a capital raising last year, which I think may have repaid a fair bit of that financial guarantee. They raised something like $80 million at the end of this year. So the cap raising was $80 million in October, and a share purchase plan for another $10 million, which closed just recently. And that's been used to repay debt. So interesting sort of financial instrument, these environmental bonds, and they've been partially backed by a bank, and then Washington sold Pats, and now it looks like that debt has been covered by a capital raising. The other thing about that we could see in the financial results this year is that AIS is now profitable versus a loss in 2024, and I think perhaps even for the year before that. FY25 results was revenue up 37 million, net profit up 69 million, resulting in a net profit of 45 million from a loss the year before. So doing well this year, which is probably why it's back on the buy list, throwing off cash again. I said before, Soul Patts has a stake. It's 31% stake in Aeris Resources, so a bit of history. Aeris acquired Soul Patts' copper business Round Oak for $234 million in 2022. The cash and scrip deal saw Soul Patts join the register and Soul Patts' Bob Milner being admitted to the board. They also replaced Soul Patts' debt in April, which I said, with another capital raising $70 million. And part of this article in the AFR on the 29th of October states that the shares have gained more than 100% this year. So they're on a rebound. What else can I say? They also bought, as part of this buyout of Soul Patts Mines, the company Round Oak, they bought or they acquired the flagship asset, which was the Jaguar zinc, copper, silver and gold mine in WA. That was previously owned by IGO Limited, which is in the Eastern Goldfields region, 250 k's north of Kalgoorlie. And it made a profit in January. But however, the mine was, or the Jaguar mine itself was talked about being in care and maintenance in the most recent announcements I saw. So that may well come back out of care of maintenance, especially if they find something worth mining, or if the copper price and gold price keeps going. What else can I say? That's probably about it. So I guess my take on the history of this company is it's done a lot of acquisitions. It's now selling off the North Queensland assets. And if you're thinking about buying into this company, it's just done a capital raising. And you've got to be prepared, I think, to expect more capital activity in the future, which is always an issue for these kind of small to mid-cap mining companies. They'll try and grow both organically, but they also have one eye to the fact that their mines won't last forever, and they're usually sort of a decade long before they become investable, but they may not get to 2 decades, which means they need to continue to raise money and either acquire or continue to explore. So that's just something to tuck away in the back of your mind if you're thinking about buying into a company like this. To go through the QAV numbers, stock price used is 54 cents, which is above IV1 of 23 cents, but below IV2 of $1.26. The current stock price is 87% of consensus target. Company doesn't pay a dividend, so we can't score it for that. Stock Doctor financial health and trend is strong and steady. Stockopedia, interestingly enough, have a quality rank of 70, but an overall rank of 95 due to higher rankings for value and momentum. But they give it an F score of 8 out of 9. So I thought that was interesting. It scores almost perfectly for its F score, but its quality rank is only 70. So I'm not sure whether Stockopedia are still looking at the company which was carrying $80 million worth of debt or not when it came up with its quality rank. Can't tell. But overall rank of 95 is very strong. The PE for the company is 11.8, which is the highest in the last 3 years, even though making a loss for probably half that period, we can't use a lot of PEs to compare that to. Prop cap is only 4.74 times, which is good. Net equity per share is 28 cents, so we can't buy it for book or book plus 30, which I guess is also a reflection of some of the goodwill it's carrying from its past acquisitions. Forecast EPS growth, however, is 174%, so growth over PE is 14.6 times, which is way above a cutoff of 1.5 before we score it, so we like that. Doesn't have an owner-founder. Directors only hold 1% of stock, but the executive chairman's got a reasonably meaningful stake in the company, I guess, as a personal basis. We can't score it for that, but it's kind of good to see that he's got about $4 million worth of stock himself. As I said, Soul Patts has a cornerstone stake in this. Bob Milner left last week. We don't know why, but I expect Soul Patts may replace him. I mean, it's not a wild part of fantasy to say that perhaps they're looking to sell their stake and he has to get off the board while that happens. I We just don't know. There's too much vacuum around his departure to know what's going on there. But until recently, he was on the board. The company is not a new 3-point trend line uptick. Net equity per share is not consistently increasing, so I can't score it for either of those. Forecast IV, interestingly enough, is twice the share price. And so IV2 is $1.26, share price is 54 cents. And that's very rare on our buy list to find a stock which is current share price is less than half its IV2, which is based on its forecast EPS. So that's a pretty good thing and a fairly rare thing on that checklist. Total for quality is 10 out of 15 or 67%. QAV score is 0.14, which is more towards the bottom of the buy list than towards the top. Risk for this company, I think the biggest risk for anyone going into this company is that there's a risk of further capital raisings. If you don't want to be diluted, you should participate in those. Not always mandatory that you do. You go case by case, I guess, but just be aware that if you have a stake or you're buying a stake in this company, it may not be the last time you're asked to top it up. It has a high all-in sustainable cost for gold, and therefore will be more sensitive to the gold price coming down than some of the other companies in the gold mining sector, which will have bigger margins that they can eat into before it becomes stressed. It's heavily reliant on exploration, this company. If the exploration schedule it's currently doing doesn't bear fruit, and then it's a lot of wasted capital, which would be an issue, which may lead to further capital raisings or for the board to look for acquisitions instead, or both. On the positive sides, Washington saw something in this company. They're pretty well known as a value investor. They've got very good credentials in the area. If you look at New Hope Mine, the coal mine, which has been on the buy list before, it was spun out of Soul Patts after they developed it. And the other thing to see as a positive is copper is trending on AI data center usage amongst other reasons. Gold is trending as well, and the FY25 numbers are much improved. So there's a few things to like about this company.
Thank you, Tony. I'm just trying to figure out where it's gone. Or last time I looked on it, what did I say it was? 37
September 21, I think you said.
Yeah, September 2021, share price was about $1.05. It's now 52 cents. So it hasn't had a good stretch, but if you did buy it January 2024 when it was at 9 cents, you'd be very happy with it. But yeah, it's had a bit of a rough ride.
Can't disagree with
having
you,
a rough ride,
Cam, and capital raisings and divestments and all the rest of it. So it has had a rough ride, but this year it's been good. It's been on the buy list.
Thanks, Tony.
Thanks.
Have a good week, everyone.
See you. Oh, happy Christmas. I won't be here next week.